One of the big stories, no doubt, the South African economy shrinking by about 7% in 2020 under the weight in part of the COVID-19 pandemic and the associated lockdowns. Now, the decline in the annual gross domestic product rate was worsened by decreases in manufacturing, trade, catering and accommodation, amongst other sectors. Now, according to data released by Statistics South Africa, a fourth quarter GDP data indicates a slight rebound with a 1.5% rally. Agriculture, fishing and forestry increased by over 13% on the back of a bumper harvest, leading to record exports in things like citrus. For some analysis on the state of this economy, let's bring in our guest, Professor Adrian Seville, the CEO of Canon Asset Managers and Professor of Economics at the Gordon Institute of Business Science. Also joining this discussion is Sifiso Skenjana. He's the Chief Economist at IQ Business. To both our guests, thanks for your time. Always great to get your insights. Prof, I wonder if I can start with you. How should ordinary South Africans look at these figures? It's the worst slump on record, but also not as worst as we'd actually predicted.
Indeed, the numbers are better, and there's a couple of factors that have helped. You've alluded to a few of those already. Some small sectors really held up. Agriculture is the standout example of coming through an extremely difficult environment in good form. But given that it is such a small sector, it leaves us where, as you described, the biggest slump we have on record. Through the course of May, June 2020, it was anticipated that the economy would contract by as much as 10% or even more. So a contraction of 7 is substantially better than anticipated. What it doesn't change is the fact that we have a sharply contracted economy, very elevated unemployment, and that the path to recovery is going to be long and hard.
Yeah. Sifiso, I'm not sure if you're able to get a glance of the business day this morning. They're reporting on S&P's take on the GDP figures themselves. Part of what's being said is that S&P Global doesn't actually believe that Finance Minister Tito Mboweni will still be able to reach his target insofar as the sovereign rating of the country is concerned, the GDP to debt ratio, so to speak. I mean, is that a fair stance to take, given what the Finance Minister had based his projections on?
Yeah, I mean, it's an interesting one. I think also when we just look at the GDP or debt to GDP ratio, first and foremost, right, we must always look at it, understand that it's a fraction, and so there are two variables that you're looking at. You're looking at the pace at which debt is moving and the pace at which your GDP is growing. I think that's quite important in how we then unpack the targets themselves. So simply what's coming out of the ratings agency is something we've already seen for quite some time, where we have seen inflation, for example, trending downwards, but our government bond yields, which is our cost of borrowing as a country, going upwards. And that often is a sign of investors having lost faith in the numbers that you present. At this point in time, when you just look at our fiscus as well as our revenue capacity as a country, we've seen corporate income tax decline in its contribution to the revenue basket from about 27% about 12 years ago to about 15.9% as of December 2020 statistics. That means that our capacity to generate revenue has materially deteriorated over that time. But we're not creating capacity in the economy that will be able to lift the bottom part of the fraction. And so, which means that we're going to have to borrow to continue to fund our expenditure needs as a country. And so I think on the back end of that certainly then aligns to the thinking around the S&P, around the fact that our borrowing program is certainly probably going to have to accelerate wider than what we've modeled as a country, and we need to, in essence, prepare ourselves for that.
Yeah, and if the inevitable is that we're going to have to borrow, who ought South Africa borrow from, given the multiplicity of our problems?
Well, I mean, there are a number of ways in which we can look at the borrowing approach. And so there are multilateral organizations who actually tend to borrow money to the country at a much more concessionary or cheaper rate of borrowing than what we look at and call the capital markets. And as I said, is that our bond yields now are some of the most expensive, are one of the highest bond yields amongst emerging markets, and therefore our cost of borrowing is one of the most expensive. If we've seen what's happened to the proportion of revenue that's now going towards servicing debt, breaching 20 cents for every rand collected, then the conversation is certainly then going to look at the likes of the New Development Bank, the likes of the IMF, etc. But that borrowing comes with certain conditionalities, and now that certainly starts to tease out a conversation around are we going into complete fiscal consolidation, as well as then going into some structural reform, some structural adjustment program that will then result often in also a tougher austerity program for the country in its attempt to do some fiscal reform.
Speaking about where we're going, Professor Seville, I mean, structural reform, which Sifiso mentions, as well as an accelerated vaccination rollout program, are just two of the, call it, salient points being punted as the gateway to some kind of economic recovery. I want to hone in on the latter, the issue around vaccinations in the country. Technically, they haven't started before. And even if you were to believe that we are vaccinating, there are people who believe it's not happening fast enough. Is that a concern you share? And if so, what bearing do you think it will have on South Africa's economic recovery?
Look, being an economist, I don't want to venture into water, that is out of my skill set or experience. But I think it is fair to suggest that the evidence that we have to hand is we are a very long way off the pace of vaccination to achieve herd immunity, and that we can forget about achieving the vaccination rollout targets in 2021 as things stand. It simply looks an unachievable figure. And I think, that takes us back to your earlier question about S&P, where there is a lack of credibility or an increasing absence of credibility in numbers that are proposed in terms of fiscal consolidation and debt management. So we really have to get out of the business, the industry of talking about what we intend to achieve, and really just getting on with it. And that takes us back to the GDP numbers, where if you look at the performance of the economy through the last 12 months, the sectors that have held up best include the household sector, consumer spending, and the government sector, supported by a very large wage bill. Now, those are generally consumption aspects rather than production aspects. And the production components of the economy are where we've got the big gaps and lags. And if you look at the expenditure side of the economy, you have a substantial collapse and very, very weak recovery in investment spending. And investment spending takes us to this term structural growth, which talks then about the long-term prospects of the South African economy. And if we take guidance from that, not only does the structural growth look very feeble, but we've got limited evidence at best or at most of a vaccination program.
Yeah. In a globalized context, which is one we're in, Prof, the stimulus package that's just recently been approved in the United States is being touted by some global multilaterals as perhaps hope that the global economy might be able to get back to where it needs to be. Do you believe that that might have any bearing on the economy here in South Africa, given how small we are relative to big players like the US, China, etc.?
That's a great question. I think it brings a number of aspects that we can give attention to. The first is, in your comment, you noted that South Africa is small, and we're also an open economy. We import and export a lot. And it's our export sector that is benefiting substantially from the recovery in global risk appetite, improved commodity prices. So if you think of iron ore, platinum, gold as being critical, coal as being critical export components of the South African basket, and you look at the price performance over the last 12 months, it's substantial, and it is translated into a meaningful gain for not just the broad economy, but also the fiscus in particular. You've also got improved trade conditions. So commodity prices plus trade conditions and capital markets appetite for emerging market risk all helps the South African case. It's our job to make sure that we don't squander that.
Yeah, very quickly, Sifiso, I am out of time. But I'm hoping there's a silver lining. We speak often of green shots in the economy, agriculture being one of them. What story do you think that tells about South Africa's economy?
Yeah, I mean, agriculture, we've seen horticulture, deciduous fruits, really starting to be the portions of agriculture that are generating value, are generating jobs, and are also enabling us, I think, to compete effectively in the global market through, in essence, what we see as a revealed comparative advantage. And so those are certainly sectors that we must be looking at, including fisheries, actually. There's really great opportunity for tilapia, for example, in South Africa. We've done the investigations, through Project Pakisa, and the data, again, suggests that there is value for us to extract there. It is the kind of sector also that can employ our lowly skilled labor that is incumbent in our current labor force dynamic, and therefore I think there's certainly great value that can come out of there, but I think we need to actually have really targeted investment in that particular sector and also look at how we leverage incentives to be able to drive more sustainable growth.
All right, gentlemen, always great getting your insights on this. Thanks very much for making time for the AM report. Professor Adrian Seville is CEO of Canon Asset Managers, as also a professor of economics at the Gordon Institute of Business Science. Also joining us there is Skenjana, Chief Economist at IQ Business. Once again, thanks very much indeed.